This episode is really interesting. It's a first in line HELOC. Okay. It's a concept that came out of Australia that has been there for a while, but Sean, who we're talking to today, he has it here in the US, and it makes fundamentally a great deal of sense. I'm considering exploring it for a few of our own properties. I'm going to start with an investment property and things along those lines. But the one thing that is very, very clear cut is that this is something that people want to hear about, because we also talk about social media in this episode as well. He has blown his business up on social media by doing things that are just very, very straightforward. Hope you enjoy, guys. And there's a lot of ideas in the social media front on how you build leads into your business from a real estate perspective at the end of the episode. Thanks again. Welcome to Rethink Real Estate. My name is Ben Brady, and this is a real estate podcast aimed to deliver sales strategies, marketing tips, and business insights from industry experts and myself to build a listing-focused business for the future. Let's get into it. Sean, welcome to Rethink Real Estate.
How you doing? Thanks so much for having me.
So we got connected by a mutual friend. He's known as Tech Tony on this on the podcast. We ask him a few technical questions. He loves to jump into the AI and give us a whole bunch of stuff. Now, two premises today that I want to go through with you. First and foremost, you've got an interesting financial product that ultimately your business does, and I want to dive into that. But the second thing that I want to go into is the social media strategy that you're using to sort of definitely blow up your business. And we'll talk more about that. But let's get into the practical element of this. Is that tell us what you do, because I'm really curious about how to use this, because I might even want to do it myself.
Yeah, we've been my team and I have been specializing in the First Lien HELOC. So it's a pretty popular strategy internationally. I mean, they call it an offset mortgage. It's pretty common actually in Australia, but here in the States, it's not pretty common. I mean, I've been a mortgage lender almost 20 years, and only up until about last year, I've had access to the loan. So it's not anything that's prevalent in the industry, but essentially what it is you have a home equity line of credit that takes first position on a mortgage. So you can use this to either purchase or refinance. And essentially the HELOC becomes your checking account. So anytime that you have any income that you have, whether it's earned income, residuals, interest, anything, any dollar amount that gets deposited into this checking account, it will reduce your principal balance dollar for dollar. So if you deposit $10,000, your loan balance, for ease of math, let's say you owed $100,000 on your home, it'd be now $90,000. And the interest that's calculated on this HELOC is based upon the average daily balance. So as the balance reduces, so does the interest charge. And I would say, generally speaking, a lot of our clients that we do these simulations for, they're probably paying off their home somewhere between 3 and 7 years.
Wow. So the thing that I'm curious about is, because the moment that you said that is that it gave me an understanding. Like, I remember I had 5 real estate offices in Australia, and one of my receptionists told me about it. That's what she did. The thing that I'm interested in the first degree of this is usually a HELOC comes with a higher interest rate, right? Mm-hmm. So walk me through is this the same? Like, is this only for people that have X amount of, equity in their home? Is it only for people that, have a smaller mortgage, or what is the ideal candidate, and what is the interest rates, and how does it work?
Yeah, the HELOC rate today is about 8%. So it does fluctuate on a monthly basis, and it follows the Secured Overnight Financing Rate Index. So it does fluctuate, but of course, as the Fed announced their rate cut a couple of days ago, these HELOC rates will start to come down, even though a lot of people think that when the Fed makes their announcement, it goes towards mortgage rates. But as you see, the last few days, mortgage rates have actually gotten worse. So these rates are advantageous for us, even though it does fluctuate. A lot of people hear the adjustable part and it takes them back to the 05 market. But when you really look at this loan, it's really predicated on your deposits and your net cash flow. So a lot of these folks, even though we have an 8% nominal rate on the HELOC, when you look at the effective rate of what they're actually paying in interest over these mortgages, that effective rate is getting close to 1% in most cases.
Right. So you mentioned that people are paying off their mortgages in, say, 3 to 7 years faster, or in just general?
Totally, altogether.
So can give me an example of that? Like, is like I've got a 30-year mortgage and I'm obviously just set at a particular level. I'm at a really low interest rate because of when I secured it.
Sure.
What is the incentive for me to change that into the HELOC side of it? Is that what I would do? Is I would refinance my property
Correct.
in order to with your product that would be part of it would be a first line of first in line HELOC, and then the other part would be a normal mortgage, or is the whole thing a first?
The entire thing is a HELOC.
Mm,
So you ideally, we can go up to $3 million and do this loan. For example, I had a gentleman who was a wealth manager out of Seattle that ended up buying a $2 million home here in Las Vegas. Obviously, this guy is well-to-do, but he borrowed about 1.6 million, and we ended up paying that off in about 18 months. So
wow.
the advantage to it, I mean, it's several advantages. One, when you look at the way a traditional mortgage is set, a 30-year fixed mortgage, 20-year mortgage, the banks front load so much of the interest on us as consumers,
Yep.
and most consumers do not know anything about mortgages, and the only thing that they're asking the lender is what's my rate and what's my payment.
Yep.
No one's looking at the amortization schedule, right? And especially over the last 3 years where rates have jumped from 3 to 6%,
Yep.
you're going to pay more interest than what you're even borrowing.
Yep.
So if we can eliminate tens, if not hundreds of thousands of dollars in interest for the average consumer because they're drowning in debt, one, we can get the house paid off. Two, we can free up more cash for them to either do some other investing or live the life that we all want to live, right? Instead of having the grind mentality of I've got to work more and cut out all my expenses, we can literally use our money for and have it work for us since the interest is calculated daily, and we treat it just like our checking account. And then
Yeah.
long term, because the line of credit is you have access to it for 30 years, the thought process is then if you could pay off, call it, $1 million mortgage in 3 to 7 years, you would still have access to that line of credit. And if we can borrow effectively against ourselves at, call it 1 to 2%, because again, that's predicated on our cash flow, why could we not then take that money and that line of credit, buy another piece of real estate, buy a business, do something that's going to create cash flow for us today instead of hoping and praying 30 years from now that we potentially have enough saved to call it a day and retire?
Yeah, it's funny. It's funny you go through this, and in my head at the moment, it's we're having a lot of discussions on the podcast at the moment about real estate and owning it. Like I had a gentleman on an episode that will air just before your one, Sean, where he was going in. I asked him, he's a commercial investor, and I asked him that, we live in Newport Beach in California. You know, my your first instinct is anybody that has any money or that you've saved a little bit of money is to go and buy a home, right? But at the
Mm-hmm.
moment, that if you were to go and buy a home for say $1 million based on the effective interest rate that you would pay plus property taxes, all of those different things, at the end of the day, probably maybe if you're lucky, like four to $500 goes to the principal of that
Right.
premises every single month,
Yep.
and everything else is, for lack of better terminology, Sean, I can't think of a better terminology now. Everything else is basically pissed into the wind. And
Yep.
I guess that the part of this that we look at then is that if this was, and part of that was me having a conversation with him, is that there's a great deal of the younger generation that are going to be inheriting the boomers real estate here shortly, and part of that is not as sexy as having my grandparents' assets as something that I have the money in. So they move it out based on the liquidity of, say, the stock market or tokenization, or they go into Bitcoin or whatever it may be because of the liquidity. This is kind of creating liquidity in real estate that's far easier to access the capital in your property.
Correct. Yeah. I mean, when you look at the cost of home ownership, to your point, I just talked to a gentleman the other day in Texas, sold a house, came into a bunch of money, bought a property, put a bunch of money down. And he's like, you know what? I was borrowing about $500,000. My mortgage payment was 3 grand. I thought I did everything right. He said, my property taxes adjusted, my insurance adjusted. He goes, do you know what my payment is today? $5,000 a month.
Yeah. Yep.
Right.
Yep.
So I
Yep.
think, when you look at where most homeowners get stuck, it's the liquidity part because they're not saving enough money. So when they get in a pinch, they're going to go to credit cards. And
Mm.
obviously, we all know that credit cards are at an all-time high, and even the default rates are starting to pick up. So if you had access to the capital, obviously we want to be smart with that money, but giving homeowners the access to the money so that way they're not waiting until the 11th hour to call guys like you or I, whether it's to sell my house or I need to try to refi my home and my back's against the wall. They have that money that maybe they can at least hold themselves over, or just get out of debt faster. I mean, I
Yep.
think that's also the name of the game. So that way you don't have these major fluctuations with insurance costs and property taxes and HOAs that we're all facing. Doesn't matter where you live in the country, it's all gone up substantially over
Or
the last few years.
individual moments where you might need to replace a roof and you then go to a credit card,
Yes.
or you might need to, do
Yep.
something individual that, yeah. Now, that being said, where have you seen this situation where it doesn't work? Is it where people sort of actually, have, they make $100,000 a year, but they spend 110, do you know,
Correct.
like that, that's where, again, don't get me wrong, nothing really works at that point, but,
Yeah.
but I'm not trying to identify this, but like, it's people that are a little bit disciplined on a budget that
Correct.
have a surplus at the end of the month. Yeah.
Yes, exactly. If they're living paycheck to paycheck, it doesn't work. We still do the analysis with those clients because sometimes they are sitting on a lot of equity. I had a gentleman that basically he was living paycheck to paycheck, but he had $600,000 worth of equity in his home.
Mm,
So by paying off some of the debt, we actually freed up almost $5,000 worth of bad debt that he was servicing every month. And by consolidating it into the HELOC, in his case, I think we ended up getting his home potentially paid off in 4 years. But
right.
to your point, yes, they can't look at it and do what a lot of folks did in '05, where they kept pulling the money out, buying the cars, buying the watches, and all that stuff. So really, I always tell our clients, this shouldn't change your lifestyle. If you're getting tempted by any means whatsoever, this is not the loan for you. But if we can look back through the last 12 months, call it, of your bank statements, and on average you still have some money left over, and you're doing all the things, whether it's you take your wife out to dinner, you like to travel with the kids, and you still have some money left over, and I can take you from a 25-year mortgage down to 5 years, then I think that at least gives them the comfortability that that's the baseline. Because once I know that they start to see the needle move, I would think most people would be motivated to try to pay it off even faster than what we're projecting for them.
Yeah, because they can actually see the serious movement. Like,
Correct.
it's
Yep.
one of those things that you look at your mortgage payment and you look at it and it's like, oh, there's 380 payments left. It's like, what?
Yep.
Like, but so I think that there's a part of this in my head, like, that makes a lot of sense. If you are disciplined with money, or you want to get more disciplined with money, could be definitely something that it provides you with. If you want to have better access to your money, you want to have some liquidity in order to invest quickly. Because again, a normal HELOC, I have to be honest, is that the HELOCs that I've had on all of my real estate, like when I moved here from Australia, I had to learn how to write a check because checks weren't existent in my financial part of the world. Tap to pay was something that was there when I left 11 years ago, and we're only really just getting into the scheme of Apple Wallet now over the
Yep.
last couple of years. There's definitely a financial element of this that moves incredibly slowly in the States. Don't get me wrong, there's way more access to capital, the entrepreneurial spirit of things, the bankruptcy laws and everything that makes this country what it is. But the part of it was just so odd that, well, I've got a HELOC. I have to go to my checkbook. I have to write a check to myself in order to get access to it. And anyway, it just felt a little archaic. This is something where you have a card, or like a
Yep.
checking account card, and you
It's
just
it's
use it
it's
that
a
way.
full-blown checking account. You've got a debit card. So yeah, it functions exactly like a checking account, which does make it a lot more advantageous because I'm right there with you. I got a regular HELOC on one of my properties, and the same thing. I've got to write a check, go to the bank and do all that. And it's just they don't want you moving money in and out. And that's why they make it, a little difficult to do that. But with this strategy, that's literally how the loan is designed. So it can simplify, finances for a lot of people. Instead of carrying a bunch of other debt on credit cards or anything, you could literally have, up to a $3 million line of credit
Yeah.
that you can use and become your own bank going forward.
And that's something that really resonates with me, is that you're 100% right. That is usually people's first reaction, is to put it on a credit card when they need to, when they could actually, only be paying 8% or so. So yeah, again, wonderful strategy. I want to segue into things at the moment. We'll make sure that all of your information is below in order for people to be able to look into this a little bit more, because I love the strategy from a financial perspective for those that it makes sense for. And I think that as a real estate audience that's listening in, they definitely need to have more tools in their tool belt for people, because it could be also a really good point of contact to a lot of their clients that they've already have and sold real estate to try and get them to free up that capital to buy another property and take advantage of possibly a slower marketplace, days on market, all of that type of stuff. But Sean, segueing across into your social media, I've taken a look at your Instagram account. You have over 20,000, I think it's 21,000, over 21,000 followers. This is something that you have really perfected over the last, how long?
I started doing content probably about 6 or 7 years ago, but I could never really gain traction on Instagram specifically. I've had some luck and some success on YouTube, but Instagram I could never really grow my account up until maybe about 6 months ago, a year ago. We really started to get some traction. But for me, what really helped was just focusing on that first lien HELOC. I stopped posting anything other than showing examples of how we're helping people. And I really just made it a point to post 100 videos as fast as I possibly could because I kind of took a break for a little bit.
Mm.
But once I started getting ramped up again, there was an influencer out there that her name's Sabrina, and that's kind of how I think even Tony and I got connected. Um, she made a video that resonated with me, and she basically said, just get to 100 videos as fast as you can, and within that, you'll get over any of the mental blocks that you have, the perfection, the doubt, and any of that. But then also she said there's a high chance that you're going to have a video take off and go viral, if you will. And I think I had about 3 or 4 videos that went viral within those 100 videos.
Now, if you were to look at your business and where you get most of your clients from, is social media now a large portion of that?
Yeah, it's probably over 90%.
Oh shit!
We've gotten so much traction with this HELOC program. I would say in the last probably 6 months, we're averaging at least 300 to 400 leads a month from TikTok and Instagram. Probably within the last 2 months, we've gotten over 2 million views just on those two platforms alone as well.
Wow, and this is, I suppose that it's a different, it's something different to what they normally hear, but it's not that different, like it's not like, don't get me wrong, it is pretty revolutionary in order to pay your mortgage off within 3 to 5 to 7 years, whatever that number is, that's far less than 30, making the public aware of, the amortization and all of that type of stuff, that they're front loading the mortgages. It's funny when you said that to me is that I look back, like, people hang shit all the time on whole life insurance. They hate like, oh yeah, you're just paying commissions to the person. That's exactly what you're doing to the bank as well.
Yeah.
So I guess that the what are the videos that work the best? I guess like first and foremost, I think that's great advice. Get to the 100, you'll get rid of any type of perfection problems. And all you're doing is basic. Is it fair enough to say, and don't take me the wrong way here, I'm not criticizing anything you're doing. Are you basically saying the same shit over and over again in the 100?
For the most part, in the beginning, when I started, yeah, it was just because we have a simulator that we use to go through with the clients, and I do that on Zoom. So what I would basically do is just walk the video through that exact same process. Hey, this is what somebody owes on the house. Here's their mortgage. Here's their rate, and how it all breaks down so screen by screen. And I just started doing that. But then also too, if you're on TikTok, TikTok makes it really easy because if you ever go to the search bar and you type in creator search insights, they will tell you what people are searching for on TikTok.
Mm.
So I just started with that. And then there's also a content gap in that search bar as well. And it tells you, hey, this is what people are searching for, but there's not enough content out there for it. And
Ah.
I would literally just look for things regarding real estate or mortgage, and I would shoot those videos to get to my 100. And I think the first video that actually took off probably 50, 60,000 views. And I think I might have gotten close to 100 leads. And like, this is crazy. I wasn't expecting that. So I kept going. And I think now on TikTok, I've got maybe 5 to 10 videos, at least 2 to 400,000. I think I've got one over 600,000. And on Instagram, I think I've got a handful that have hit at least 100 to 200, and a couple that I think are over 4 or 500,000 views. So you just got to keep showing up every day, like we always talk about in this business.
So I've got two questions for you, and I'll start off with the first one. Is that have come to mind? Is that, are you doing this all yourself? But now, do you have a content person, or like what have you start with, and what have you evolved to?
I started with a full team back in the day. I mean, this was probably 2019 before content. I mean, we were pushing content, but I
Mm.
don't think as prevalent as now that we kind of coach people in the industry. But I mean, I had a full-time videographer working for me at the time, and I had probably 2 editors just doing all of our edits. And since then, I've gotten rid of that, and I literally just shoot all my content just on my phone. And it's literally, I hold it up, do my video, I edit the video on my phone in TikTok, and I post it. That's it. And I add some captions to it. I don't do anything special, and I try to pump out at least 2 to 3 videos a day if I can.
Wow. So TikTok, YouTube Short. Do you do any long format?
I haven't done any long format YouTube videos, but they do have a 3 minute limit. So if I'm doing something on TikTok that does go past the 3 minute mark, it will automatically put it to a longer form YouTube video instead of a short.
Got it. Okay. And then your most successful platform sounds like it is TikTok, correct?
TikTok, yeah. And then I did some I created well, I didn't create. I ended up using a system on N8N. So with some of these platforms out there, you can connect your social media accounts, and you can make it a lot easier in terms of posting.
Yep.
So the way I have it set up is I will post on TikTok, and then the system will then post it to Facebook, Instagram, LinkedIn, Twitter, Threads, and YouTube all at the same time.
Right.
So I literally just focus on posting on TikTok, and I let the automation take care of the rest, and then I move on with my day.
And then is it lead capture? Are you telling people are you telling people in your video, hey, put your information in, I'll give you more information or something like that?
Yeah, so it'll be a mix to where it'll be like, hey, comment the word HELOC, and I'll send you some information. And a lot of times they'll DM me or they'll comment, and then I'll send them the information. So we're capturing these emails and we're building the database, because a
Yeah.
lot of these folks, they're not, this isn't a strategy that they're gonna get the first time and they're gonna make a decision. A lot of this, it's taking months, and even some of these folks where they're in our drip campaign, and it's 2 months later, 3 months later, and they
Yeah, of
finally book a
course.
Zoom
Yeah.
call with us.
Yeah,
Yeah.
it's pipeline filling. That's exactly
Yep.
what it is. And I guess that what is your conversion out of every 100 leads you get? What do you think your conversion is to a meeting, or is that too difficult to sort of
It,
go through because of the lead
it
time?
is a little difficult just because of the nuances of sometimes they don't want to get on. But
Yep.
I would say right now, um, we've got about 100 meetings booked within the next 30 days.
Well,
And the soonest that anybody can book a call if they go through our Calendly appointment right now is December. So
wow. Well,
it's
well,
created a
that's cool.
problem that I'm working on to build some automation to really move the needle faster, because I don't want these folks waiting 6 weeks. But
Yeah.
that's how much they want to learn this thing. They're
Champagne
willing to wait.
problems, Sean. Champagne problems. Let's be honest, okay. Well, again, I'm fascinated by both the product that you're offering, but then also the strategy of social media. And then just this is a general question for me is that we run a obviously we run a real estate company, but the other part about the other company that we have is a non-distressed luxury auction platform, and it just makes me think that you're offering something that's a little bit different in the industry from a mortgage perspective. The auction platform is something that agents could definitely lean into that is different and just make all of their content about that day in, day out, make it about the differences that it is and why it is fundamentally different and better than the traditional real estate transaction. Could you see that, building that level of content within 100 days, because you look at it and you're like, well, what if an agent just did this on their marketplace or real estate in general? They could definitely do that, but it's the same shit that a lot of other people would be doing as well.
Yep.
Whereas if you could make it about something that is primarily different and contradicting the traditional real estate model,
Yep.
then that's kind of what you're doing. It's contradicting the general lending model, so to speak.
Yeah, yeah. I think anything that bucks the trend, I think people are looking for solutions, whether it is on the real estate side or obviously the mortgage side. And it might be timely because of where rates are and people are waking up to the idea of how much interest they're paying.
Yep.
But yeah, absolutely. If you're going against the grain, and for me, I do call out the industry itself, because
Yep.
I say, a lot of loan officers, they just quote an interest rate. They're not teaching you anything about a mortgage. So why go that route? And here's what we do, and here's why we do it that way. So I definitely agree. If you guys are doing something that nobody else has access to or doing, and you just exploit that and you really drive that home, like they say, right, the riches are in the niches. So I think the
Yeah.
more that you can drive that down and really make that the emphasis of the business, I don't see why you couldn't move the needle with, gaining some followers and really growing the brand.
Fascinating episode. So Sean, appreciate you being on Rethink Real Estate, considering not only are you offering something different in a product perspective, you're also doing it in a different way and giving people the insight. So thank you for joining Rethink Real Estate.
Appreciate it, man. Thanks, Ben.
So about 75% of our audience hasn't liked, followed, or subscribed to our podcast. It would mean the world to us, and it would help this podcast more than you know to expand our reach if you were to like, follow, or subscribe on any of the platforms that you're watching or listening on. Thanks again.